Bitcoin is back in the spotlight this week as the Fed's latest policy shift sends ripples through risk assets. With volatility rising and long-term projections still sky high, we'll break down what could be driving crypto's next move. Hey everyone, I'm Jenny Horne here with Crypto Corner, where we discuss the latest price activity from Bitcoin and the broader crypto space for the latest week. Now joining me now is Nate Peterson, Director of Derivatives Research and Strategy at Charles Schwab. So Nate, thanks so much for joining us as always. Let's start with some recent price performance and technical levels that have stood out to you.
Yeah, no doubt, Jenny. Let's start with the charts. Let's take a look at Bitcoin. Let's look at a 3-year chart, just to give us some, broader context of what's been going on here. If you look at that uptrend, it's still intact. Obviously, that the gold line that we have there on the chart, there's the 200-day simple moving average. We bounced off it a couple times. We've breached that. Today we're down, and look, this is because of primarily Oracle's increase in capex spending that is basically hitting the AI trade. So risk off, and then therefore it rolls over into the crypto space here. I guess the good news is that it's trying to find some support around this 90K level. Obviously, 80K is very important. That's basically what we tested last month in our most recent sell-off. The downtrend looks like that it's attempting to, stop. So here's why it's important, Jenny, because when you see this kind of a 30% drawdown that we've seen in Bitcoin price here, what the price is searching for is some kind of support. So you could say that 80K is support, but if 90K can be its support, if we can just kind of hang around 90K or so, then from a technical perspective, those that are thinking about going back into Bitcoin because it's drawn down 30%, they have something to trade against. So you want to see some of that stability, some of that bid support, some of that demand that's in place there. And so I'd say the good news is for Bitcoin is that it looks like it's trying to hold its own around 90K. Said otherwise, we're not continuing to make lower lows on this downtrend that started back in October. So that's encouraging. So going forward, yes, you'd like to see Bitcoin get back above. If you want to look at near-term resistance, I would say 95K. That's where it's backed off of over the past couple of weeks. Beyond that, yes, you want to get to 100K and then above that 200-day simple moving average. I think that, what happens between now and year end is likely going to depend on what happens within, basically, the more speculative, growthier areas of the stock market. I mean, we're seeing some outperformance in, the healthcare and some of the other underperforming small caps, et cetera. And, I'd also throw out there that we're seeing outperformance in gold. And I think that's likely also not helping Bitcoin out to see that relative outperformance in gold. But for now, we're just going to say that 90K, if it can hold around this area, that would be an incrementally, supportive, bullish technical sign for the Bitcoin bulls. Let's take a look at Ether as well, because Ether was outperforming recently. It got basically to a 1-month high here. We know that they had the Fusaka network upgrade last week. I think that really helped the outperformance last week. We've got the 200-day simple moving average roughly around 3,100, 3,095 or so. So if you're an Ethereum bull, you'd like to see that, we'll call it a psychological 3,000 level hold. And then also that 200-day simple moving average. It's somewhat important, but if you wanted to get a little bit deeper into where that support should hold up, it's around 2,700. Those were the lows that we tested here over the last couple of months or so.
Okay, and how does the Fed's latest rate cut influence crypto prices? And really, what does this dovish tilt mean for Bitcoin and Ethereum as, of course, we head into the new year?
Yeah, Jenny. So let's talk about the Fed meeting yesterday because, of course, look, when we're talking about the crypto space, and you're talking about the Federal Reserve, and you're talking about whether they're in an easing or a tightening cycle, if I just simplify it, anything that increases money supply, anything that increases the Fed's balance sheet, anything that increases our U.S. government debt generally is bullish for crypto prices. So Bitcoin and other crypto coins can be very sensitive to price action around FOMC meeting, as these types of policies can affect money supply, et cetera, and therefore read through to the fundamental kind of dollar debasement story that has been driving crypto prices here over the past 15 years or so. And so what did the Fed do yesterday? As expected, 25 basis point cut. And then maybe in a little bit of a surprise, Chairman Powell said that he's going to do some technical treasury bill buying starting tomorrow. So this is really just to manage liquidity. It's not quantitative easing. And, Chairman Powell himself said that if you want to call it QE light, go right ahead. But this is really just to manage liquidity. So when that was initially announced, we saw crypto prices and stocks react positively to that announcement, like, oh, this was a bit of a surprise. And then I think as that news was digested that, oh, it's not really QE. And QE, by the way, would be good for crypto prices. When the Fed is moving historically into a quantitative easing type of a cycle, that it tends to be a boon for crypto prices. It's been digested. I think we're still kind of assessing the landscape. Bond yields are a little bit lower. Treasury yields are a little bit lower. But then again, what is affecting Bitcoin price today? It's going back to the risk on, risk off trade. We were looking good yesterday until Oracle reported and said they're increasing CapEx. Now, if you look across the board, a lot of your tech stocks are down. And then here we go with crypto being impacted as well. But I think going forward, the good news for stocks, and you do want stocks to do well if you want crypto prices to do well, is they're both risk assets. The Fed did increase their GDP forecast significantly for 2026, a little uptick in 2025, and a little deceleration in the inflation expectations as well. So net, I think that was bullish for stocks, and that should be good for crypto prices. But right now, the Fed only has one more cut next year. And then, of course, when Powell steps down and we get our new Fed chairman, that's likely going to create some volatility within Bitcoin prices. If it's easier or looser policy, then one would imagine that would be bullish for crypto prices.
Okay, and last but not least, why have some of these major firms like Standard Chartered or Bernstein slashed their near-term Bitcoin price targets, and what really does this signal for overall long-term projections?
Yeah, so, there were some, it's probably not a surprise. So, Jenny, if we go back to 2025, I think coming into this year, we have a crypto-friendly administration. We've got easier regulation, or at least regulatory framework that is actually being established. We have the potential for increased adoption, both on the institutional and the retail side, and along with many of these, DAT companies, the treasury companies that are purchasing crypto. So there's a lot of optimism coming into this year that all of the signs are pointing to higher crypto prices. And Bitcoin has done well. We did get up to 126K. It's just over the past, 2 or 3 months here that it's really underperformed. And as a result, we've seen some of these price target cuts from Standard Chartered. They were, basically at 200K by the end of this year for both Bernstein and Standard Chartered. Now they've kind of pushed their 2026 year-end target to 150K. So a significant downgrade. It's not a surprise given what's going on with with Bitcoin right now at around 90K or so. If you look at the longer term projections, though, there's 500,000 that Standard Chartered has by 2028. And Bernstein has a $1 million price target by 2033. We've also seen some of these from other individuals, such as Cathie Wood. She has, $1 million price target out there. Tom Lee believes that Bitcoin could make a new all-time high in January. So he remains bullish here. But I think the bottom line is we've got to be very, take these price targets with a grain of salt. A lot of them get derived from historical performance of Bitcoin, which has been essentially the best performing asset over the past 15 years. And they tend to extrapolate. Well, if it was up this much, for this time frame, we can only anticipate it'll be up this much as our price target suggests. Because Bitcoin doesn't have any cash flow. You can't do a discounted cash flow model to try to, derive some of these price targets. So you really look at historical price performance. And then I'd say maybe perhaps these longer term high, the bold price targets that are out there have to do with the fundamental drivers behind blockchain, Web3, et cetera. So that's the good news, is that there are now fundamental drivers behind potentially higher prices for cryptocurrencies, stable coins, for example, and the increased adoption there. It's good for the Ethereum network, Solana, et cetera. And you think higher utility, well, maybe that does increase the value on these coins going forward. But I think what this year has taught us is that, you have to remain flexible and humble. And I think the price action we've seen over the past couple of months just kind of reminds us that Bitcoin still kind of remains in that classification of a risk-on asset. And so I feel like if we can just hang around these 90,000 levels in Bitcoin, above 3,000 in Ether, let's get to close out the year and let's move into Q1. Perhaps we can then begin to get a fresh perspective on the potential for Bitcoin to move towards some of those longer term price targets that admittedly are pretty significant from the likes of Bernstein and Standard Chartered.
Yeah, I do feel like the market needs a bit of a holiday here as we reset, of course, as we go into 2026. It's been a very quick year, but a very busy year at that. So we appreciate it. Really great summation of some of the price activity we're seeing in Bitcoin and Ethereum as of late, Nate Peterson. And thank you all for tuning into this week's Crypto Corner. For more crypto content, remember to subscribe to the Schwab Network YouTube channel. That'll do it for us here. I'm Jenny Horne. We'll see you again next week.